Hey, good morning, everybody. It's Mike. It's middle of April, April 14th already, and it's hard to believe that it's already the middle of, sorry, of March, not April. It's already the middle of March, and the first quarter is pretty much already done. These markets lately have been pretty wild, especially here in the US with these potential bank failures and, getting bailed out. And what I want to be talking about today is, how to see some of these hidden market signs and opportunities in the order flow, because, especially yesterday with all the volatility in the market, people are thinking, well, the market's so crazy, it's so volatile, it's hard to trade. But you know what? When you know what to look for in the market, in the order flow, it really, I don't say becomes easy, but it just becomes second nature. Like you can say, oh yeah, there's a great opportunity to sell here or to buy here. So what we'll be talking about today is a few things. And as a former professional trader, and everyone says, oh, they claim to be a professional trader, but when I talk about being a professional trader, I worked on an institutional trading desk for over 20 years, and I'm delighted to share with you the strategies of order flow trading. Now, these strategies help experienced traders identify trends in the market and capitalize on them, while providing beginners a way to safely conduct their trading activities by understanding what's really happening in the market. And it is essential for any trader to understand these strategies in order to develop more successful trading results, because at the end of the day, you know, we want to be more successful in any endeavor, whether it's trading or whether it's playing a sport, right? You always want to strive to do your best. And today I'm going to teach you several things. One, I'm going to show you how to spot institutional traders and their activity, how to easily understand market sentiment, especially when a market like is moving around very fast, just like yesterday. News is coming fast, and it's like drinking out of a fire hose, where if you following Twitter, or heaven forbid, watching CNBC, every couple minutes, breaking news, something new is happening, and the markets are going up, they're going down, they're going up. And that's where understanding market sentiment, but more importantly, spot where traders who are driving the market are active. And ultimately, your goal should be to make better trading decisions by seeing how the market is reacting to the traders who are driving the market, or the market sentiment, or where the institutional traders are coming into the market right now. So taking advantage of the hidden institutional order flow can seem like a daunting process at first. And with a little focus and dedication, retail traders such as yourself, and even myself now, I lump myself in as a retail trader, because I don't work as a trader at a bank or a trading firm anymore. And you want to be able to tap into the information that's available to us from the exchange to use it to our advantage. So by studying order flow, we can learn to identify buying and selling patterns that big institutional investors leave behind in the markets. So just really briefly, that's my picture. Anybody that's new to this presentation, or who I am, just give you a little bit background. Now, I've got over 20 years of institutional trading experience. Most recently, I spent 8 years at JP Morgan in Singapore on the trading desk. Okay, prior to that, I worked for Cargill. Cargill is, the big commodity trading company here in the United States as well as the world. It's a privately held company, so not a lot of people know about it, but if you're in the trading world, you know about it. I mean, they account for about 30% of grain exports and about 25% of meat exports, but they're in everything, from oil to even interest rates, currency futures. They trade everything. Prior to that is with Commerzbank, the big German bank, back when German banks were still relevant. I spent 3.5 years, close to 4 years in Chicago, trading Eurex out of Chicago, so trading Bunds, DAX, Schatz, Euro stocks, and I was the licensed Eurex trader, where I was literally one of only a handful of traders at the time that were trading directly on the Eurex electronic trading terminal, directly into the exchange in the US. I mean, when they first launched it, the CBOT came out and said, hey, this is we can't have these foreign exchanges in the U.S., but fortunately I got in so early that I was able to be grandfathered in. Prior to that, I spent 2 years at EDF Man, the big English trading company, and prior to that, I was with Dean Witter. I started on the CME trading floor and eventually left the trading floor when electronic trading was starting up. So, the reason why I talk about my background is because, it's not like, oh, I watched some YouTube videos. No, this is what I did, and this is what I teach, right? I teach you things that helped me throughout my career. And, I got started electronic trading when electronic trading first started up. This was back in the mid 90s, trading on the native exchanges from the CME, which was Globex, Project A, which was on the Board of Trade, NYMEX Access, which was, the NYMEX and Colmex system. So, what I talk about is things that have helped me in my career, and it was a long career, right? You're not gonna last over 20 years, at professional trading firms unless you're good at what you're doing and you understand the markets and what you're doing. So, that's why I talk about my background up front, so you know it's coming from the horse's mouth. So I'm one of only a handful of former institutional traders who have mastered both order flow trading and teaching it to retail traders all over the world. So let's take a look at the steps that you need to follow to take advantage of the institutional order flow that's traded in the market every day. So get ready. If you have a phone, just put it on silent or turn it over so you're not distracted. Maybe get a pen and paper, or maybe take some notes. So a brief disclaimer now, I do want you to understand trading does involve risk, right? You should only trade with risk capital that's not going to jeopardize, your current lifestyle. Basically, don't trade with your rent money, is the simple way to say it, or your mortgage payment, or your kids' tuition, or your lunch money, so to speak. So just bear that in mind. Trading is risky. People do blow up accounts left and right. Now, I'm not saying that you're going to do that with order flow, but you got to understand the risks of anything before you get into it. You play soccer, you could break your leg. So first thing I want to talk about is spotting institutional traders and their activity. Now, people don't really think about it very much, but it's not just trading taking place. There's different types of trading that's taking place in the market. There is aggressive traders, there are passive traders. Okay, and people say, what's the difference? People buy, people sell. Well, someone who's going to buy has to buy it from someone who's selling, just as someone who's selling is going to sell to someone who's buying. But there's different types, right? You have aggressive ones and you have passive ones. Now, what's the difference? Okay, so when you look at the market, you see a bid and an offer. Market's 5 bid at 6. The people that are trying to buy it at 5 to pay 5, they're the passive buyers. The people that are trying to sell it at 6 are the passive sellers. They provide liquidity in the market, right? When people talk about, no liquidity in the market, that's usually when there's no bids or no offers, right? On either side or both sides. But when there's liquidity in the market, then you have people that are willing to wait for the market to come to them. Now, the aggressive traders, right? People say, I want to buy crude oil now. What's the market? It's 5 bid at 6. Okay, just buy it at 6. That is the aggressive trader. The people that buy whatever the market price is being offered, or sell it at whatever the current bid price is. That is the aggressive traders. They are the ones that cross the bid offer and either sell into the passive buyers, or sell into that liquidity, or buy the existing liquidity there. Now, it's from that different types of trading that you get more information. And with order flow, there's 3 sort of cornerstones of information. There's delta, which is the difference between the aggressive buyers and the aggressive sellers. So not only do you have, aggressive traders and passive traders, you also have aggressive buyers and aggressive sellers. Aggressive buyers are people that buy at the market. Aggressive sellers are sellers that sell at the market, right? They're either buying the offer or they're selling the bid. And the difference between them is what's called the order flow delta. So for example, if you have a positive delta of 63 on a bar, that tells you that in that bar, there was 63 more aggressive buyers than aggressive sellers. Just as if, say, the bar had minus 56 delta, then it'll tell you there's 56 more aggressive sellers than aggressive buyers in the bar. And it's from that information that you can start to make better trading decisions, because now you're looking at not only the volume, but how the volume is being transacted. Now, another piece of information that you're going to get from the order flow is what's called the point of control. And if you're an intraday trader, order flow is best used intraday. Each bar that you're looking at, whether it's a 1-minute chart, a volume-based chart, a tick-based chart, each bar has a point of control. Each bar has a price level where the most volume traded. Okay, and that is market generated information. It's going to tell you that, hey, you know what, at this price, this was sort of the fair price where everyone was, not everyone, but the majority of people were happy to transact. And then the last piece, that's one of the cornerstones, is what's called imbalances. And imbalances also deal with the aggressive traders, and it's when the aggressive buyers outnumber the aggressive sellers by a certain percentage, usually 4-1. You could use whatever percentage you want, but it should be a reasonable amount. And think of a tug of war. Okay, if you have one person, all people being equal size, one person against 4 people, well, that's an imbalance. The people, the 4 people on the one side in the tug of war are generally going to win. And it's the same in order flows, but you also have buying imbalances and selling imbalances. So buying imbalances when the aggressive buyers outnumber the aggressive sellers by 4-1, or a selling imbalance is when you have, aggressive sellers outnumbering aggressive buyers by 4-1 or more. So, and it's from imbalances that you could also determine, who's really in control of the market. Okay, so those are basically, sort of the building blocks of order flow that, your analysis will grow from. Now, this is yesterday in the E-minis. This is a simple 1-minute chart, a common chart. And most people would look at this chart and say, that's nothing. Market's just sort of going sideways. It's just noise, right? There's no trading opportunity. Well, there is, and if you know what to look for in the order flow, because, order flow traders will look at this and they'll see that, hey, you know what, there actually is very good opportunity here, because they know what to look for, in the market. All right. And I'm going to teach you how to look at a chart like this and see that information very easily. And, when you're looking at a simple bar chart, right, a candlestick chart, people don't really look at bar charts, they focus more on candlestick charts. It's really one-dimensional. Your price points are basically the open, the high, the low, the close, and you're looking at the relationship to the open to the close. There's really not a whole lot of other information you could use. And I understand, people like to look at price patterns, in the candlestick charts. Okay, fine. They work sometimes. Oftentimes they fail more often than not. Now, when you add an order flow chart, this is your simple order flow chart from several years ago. Not a decade ago, where really all you had to go off of was, your delta, your point of control, your imbalances, and that was about it, right? And it was good, right? A lot of people made a lot of money trading order flow just based off those pieces of information. But you could actually do further, deeper analysis, and more importantly, that analysis could be put into your chart. So instead of sitting here trying to think, what's happening down here? Or why did the market come back here and then move up? Well, if you have software that is programmed to read the order flow, it will tell you. It'll tell you what's happening, right? This is right. Market was coming down. Remember, this was the move, right? We were selling off, then the market started rallying back up, pulled back a little bit, continued to rally, right? Wouldn't you like to know that, hey, you know what, maybe, if the market pulls back here, it could stop here, right? And then continue its move. Or maybe this is going to be the low. That market is rejecting sort of these lower prices down here at 107, 66. Because people, that like to look at candlesticks, there's a bullish pattern here, there's a bullish pattern here. Well, it didn't work. This bullish pattern did. So, sometimes you need a little bit more information, and the order flow provides it to you. And the order flow software nowadays has that capability to tell you, hey, you know what, as this market was selling down, the market was getting weaker. The aggressive selling rather was getting weaker. So you had the aggressive selling coming down, and it was weakening. So I was telling you, once you know that selling as you're coming down into these lows down in here is getting weak, then you could position yourself to take advantage of the move back up. Because if the selling is getting weak, chances are it's not going to continue going lower, right? Because the aggressive sellers, the people that are moving that market, are no longer there. And this is just one of the tools that's available in the order flow, right? That you could have, that software exists to show you this plain as day, right? It's very simple to see that, hey, you know what? There was that weakness here, right? Imagine, right? If you're looking at your bar chart, you're sitting here wondering, maybe this market's going to rally here off this, off, bounce up here. It goes up one green bar, then it sells off again. Well, what made this low a better buy than this one? Well, it's because as this market was coming down, that aggressive selling, right, that was moving the market lower was weakening. And once you know that the aggressive selling in a direction is weakening, well, you remove that pressure on the market from going down, naturally, it should just start going up. Now, market sentiment, right? Market sentiment is important because it's the attitude, and opinion of the market expressed in price. And it's the sentiment that suggests directions of prices. I mean, think about it for a second, right? I mean, we all have our opinion of the market, and that's what drives a lot of people to take a position. So generally, market sentiment is divided into two categories: bullish or bearish, positive or negative. Now, keep in mind that trading decisions should not depend solely on market sentiment, as it changes rapidly depending on current events. And yesterday was a great example. All that extra volatility in the market because of those bank failures is affecting market sentiment. And add to that, we're living in an information age where information just comes fast and furious, whether you're on social media or watching TV or searching the internet. You're seeing so much information come through that you're going to miss trades like this. Excuse me. It doesn't look like much, but this is a 10-point move. This is a $500 move from here to here. And what it was weakness, just like on the other chart that I showed you with the euro currency. This market had been going up. Now it's exhibiting weakness, right? The order flow is getting weaker as this market is moving, and you have a quick, in 2 minutes, a quick 10-point move basically from here to here. And it doesn't matter which market you're looking at, order flow transfers itself neatly to other markets, because really at the end of the day, all order flow is it's the market. You're anticipating what's happening based off of the information generated from the market. This is Japanese yen yesterday, right? It came up here to this double top and then sold off. Why? Because there was weakness up here. Sorry. And if you know that you're coming up to a double top, but the aggressive buying is weakening, what do you think is going to happen? You think we're still going to go higher? No, because you're removing that buying pressure. Well, not to say removing it, but that buying pressure is dying off, that aggressive buying, that once the market starts turning around, look for it to sell off. Right now, bonds, right? This is a 1 minute chart. Now we're up here near the high of the day. Anytime you're up near a high of the day or down near a low of the day, you always want to be asking, can this market go higher, or is it going to sell off? Just like here, yes, on the swing high in the yen, it's coming back up to this double top. Can this market go higher? We don't know. Well, if you read the order flow, you could see that aggressive buying, that buying that's going to take the market higher, is getting weaker. Chances are it's not going to. But yesterday in the bonds, this was around 7:30, right? This green line here is the high of the day. We had just hit the high of the day. We hit it once, twice, three times, sort of come off. Okay, well, people are looking at this and saying, well, this is it. Market's probably going to start to sell off because we can't, we've already tested that high basically twice and it's starting to come off from the high. But then you see what happens. It reverses and takes out the high and goes higher. Well, if you're reading the order flow, you could see that, yeah, you have some aggressive selling coming in, but it's getting weaker. And if the market is trying to sell off, but that aggressive selling that's going to cause the market to sell off is getting weaker, it's probably not going to sell off. And it doesn't, right? It stops right here, reverses, and starts going higher again. And that's, a simple tool in order flow, right? Gold. Okay, again, market was selling off quite nicely, quite sharply. We went from 1917 down to 1913 in about 5-6 minutes. Oh, the gold's going lower. Well, it's not, right? You can see how it just stopped here and even came back right to that level is because that aggressive selling is getting weaker. Now, in the past, you'd have to understand what's happening, in the order flow and price and all that to understand that it's getting weaker. Now, with software, it'll just highlight it to you. Simple. Oh, there's weakness here, just as there's weakness here. So knowing at these prices, around 1913, 1913 and a half, there's weakness down here, right? Aggressive sellers don't really want to sell down here. So once you know that information, it's going to make your trading decision a bit easier because you shouldn't be looking for shorts. You should be looking for reasons to potentially be getting long. Crude oil. Crude oil was all over the market yesterday. It was like $4 up, like $4 down. But you can see in here, right, as it's just sort of humming around the 74.50 area, weakness, 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 right? The people don't want to keep selling it down, below 74.50. They're giving up below, selling it below 74.50. Now, the thing that's interesting, it's not like there was a lot of big liquidity down here where there's a big buyer sitting down here absorbing everything. You can see as it's coming down, you can see the volumes that's trading, 22, 2, 36, 22, 4. So it's not like there's a big buyer here that's bid for 500 contracts that's just taking everything in. People, they're testing the market, right? They're testing it to go lower. They trade 6 lots, they trade 2 lots, they trade 2 lots, but nobody's got the appetite to sell it lower. And what happens? The market reverses and it has this nice reversal from about 74.50. You get that one bar that's almost about 50-cent move in that one bar, and it just keeps going up. So again, understanding what's happening in the order flows is just going to put you slightly ahead of everybody else that's just looking at price because they're thinking, oh, this is it, we keep testing this low, we're going to break out. Well, that chances are we're not going to break out because that selling that you're looking for to move the market down is too weak. It's not enough to move the market down. Traders love to talk about how volume is important, and it is. I mean, volume is important, but what's just as important is the type of volume, the aggressiveness of trading, or in the case I just showed you, the decrease in directional aggressive trading, which is a sign that sentiment is changing. So think about it. Okay, there's volume, but there's different types of volume. There's aggressive volume and there's passive volume. And you're not just looking, a lot of traders spend all their time looking for volume, but really where you're going to get an edge, especially if you're using order flow, and that's what trading is all about, is finding an edge here and there, is finding where there's lack of volume, lack of aggressive trading, because ultimately that's what really drives the market is the aggressive trading. If people don't keep buying at higher and higher prices, the market's not going to keep going up, just as if they're not aggressively selling into lower prices, taking it out, selling it at the next lower price, and so on, the market's not going to keep going down. So if you can tell that that aggressive buying or that aggressive selling is slowing down, getting lesser and lesser, that's going to give you an edge over people that are just following price. Now, being able to spot traders who are driving the market. Today was CPI and the market again went nuts. Um, if you, I don't know if you guys are on Twitter, but I remember last week Biden was saying that CPI is not going to be that bad, and lo and behold, it wasn't. But I don't know, 6% is still 6%. It's not like last year 6% was a big problem. This year they think 6% is not. Um, so there's always things that drive the market. So one of the things that is very important is having a way to determine when a big trader has a big order that he has to get done and doesn't care too much about his effect on price, because ultimately, when you're a size trader, you've got an order for 500 contracts, 750, 1,000, whatever. Um, there's times where it's going to have an impact on the market, right? And if you're trying to trade that type of size, you don't want to impact the market, because once people start picking up that, oh, this guy's got a big order to do, they're going to jump in front of you, right? And ultimately, you're going to get a worse fill. And people think, oh, whatever, that doesn't matter. Well, it does matter, because there's a thing called execution alpha. And what execution alpha is it's basically a gauge of how good you're executing the trade. And when you're trading ones and two lots, it's not that big a deal. But when you're a size trader and you're trading, 500 lots, 1,000 lots, one tick, right? One tick in the E-minis, $12.50 on 1,000 lot is $12,500, right? Imagine if you're consistently chasing the market, getting lousy fills, you know, even just a half a tick on 1,000, that's $6,000, and that's on one trade. You're trading a bunch of different markets each day. At the end of the year, it's a lot of money. So they're very conscious of how well they're executing their trades. That's why now big banks are spending tons of money into finding easier, better ways to execute larger orders. But there's times where big traders, I just need to get this done, and I don't really care that much, because one, either I'm hemorrhaging money, just get me out, or two, I think the market is going to move, so just get me in right now. Okay. And think of it as market forces. Now, when someone's looking at a chart, this is a candlestick chart, or sorry, a footprint chart. But if you're looking at a candlestick chart, you're not even going to see the volumes at price. But when you're looking at a footprint chart, there's the information in there. Okay. And what the volume is traded on the bid, the volume is traded on the offer. And one of the things that we've discovered with order flow is you can often see, it's what we call sequencing, when a big order is working its way through the market. And again, software is a great tool to have to help your trading. If you could tell the software, hey, highlight to me where there's like potentially a big order working its way through the market. If it's a buy order, highlight it as blue. If it's a sell, highlight it as magenta. You don't want to make everything green and red. But you could just see here, big order potentially going through the market, big order going through the market, buys, big sells, big sells, big buy, big buy, big buy, big buy, big buy, big sell, right? And it's that information that's going to help you position yourself, instead of swimming against the stream, so to speak, trade in the direction of that big money that's being traded. If you can spot that there's big selling going on in here, you don't want to be getting long. Get long for what? To get run over, right? If this market is selling off and there's a big buying coming in here and you're trying to get short, well, again, it's just you're standing in front of a freight train. You're going to get run over. Trying to short here, you're going to get run over. Try and short anywhere in here, you're going to get run over. So knowing where these areas are, one, it could give you a trading opportunity, but two, it's going to help identify that, hey, I don't want to be trading in that direction, right? I don't want to be trading short when I know that there's big orders going through. And on a day like yesterday, where nobody really knows what's going on with the Fed and they're doing with these bank bailouts, big traders they're just coming into the market, balancing their books, balancing their position. They're not so price sensitive at a time like this because it is, I don't want to say a chaotic time, but it's a sort of a fast moving market, and they don't want to be missing out on anything because while people look at these bars and think, ah, that's nothing, it's actually, these bars are 10 points, and 10 points in the S&P is a $500 move. So when that sort of volatility like that picks up, the uncertainty in the market, big traders have a tendency to just try and get everything done as quickly and effectively as possible. Euro currency, same thing. Again, the same concepts, whether you're looking at E-minis or NASDAQ or euro currency bonds, it it carries over. It can be applied to pretty much any market as long as it's an auction market. But if you know that there's big sellers in here, you probably don't want to be getting long. Just as if there's big buyers in here, you don't want to be getting short. And instead, you could also be looking for reasons to get long or reasons to get short, right? When you know that, yeah, there's a big seller was present up here, and if we start breaking off, you could get short. Just as there's a big buyer in here, it's your reason to potentially be getting long as well. Bonds, right here in the middle, right? We're selling off, we pull back a little bit up, and then the big seller comes in and the market continues down, right? And again, once you start putting these tools, pieces of information that you're seeing in the order flow together with your knowledge of trading, right? Because not every time you get a bounce, you want to get short, right? Maybe you would want to get long. And I know some people say, oh, the market's bouncing, we're coming to go back up. Well, if you know that there's a big order going through the market, right? What we call sequencing, you're not going to get long. You're not going to fight it. And instead, you're probably going to look at it from the opposite. Say, okay, market's selling off. We got a little bit of a bounce. Now that strong selling, there's a big order coming through the market. It's time to get short, all right, to catch those moves. Gold, okay. See, big order going through the market here. Rallies all the way up to this high. Big order coming up in here. This is a move from 1905 up to 1912, back down to 1909, right, where you got some more aggressive selling. Crude oil came right down, a nice 45-degree move down, starts reversing. It's almost a V-shaped reversal, but after we hit that low, it's enough to attract buyers coming into that market to help move the market back up. Okay, so it's order flow sequencing. Again, it's information based off of what's trading in the market. Understanding where the big orders are coming into the market that are affecting the direction of the market, right? You always want to be trading ideally in the direction of the big money, right? The people that are moving the market, so to speak. Don't fight them, play with them. Right? If you think of it as like, you know, basketball, right? If you want to play with Michael Jordan or play against him, right? If you were in the league during, when Michael Jordan was, at his prime and you're on the same team, well, you're going to the championship every year. If you're playing against him, you're not going to go anywhere. So think of it like that. And in trading, you want to be trading on the side of the money that is influencing the market, that's causing the market to move. Now, make better trading decisions by seeing how the market is reacting, right? And this is where order flow is going to come in and really help you. I just get a chuckle when I see people post stuff on Facebook or whatever, Twitter. Say, oh, I had a bad day. I'm just going to take my best setups. Well, you should always be taking your best setups for one. Right? You shouldn't be taking marginal setups. I mean, you shouldn't really be trading unless your setups are the best ones that you could take. So, I mean, I never really understood that concept of, well, I'll just take a good setup. No, you should always be taking your best setups. And as a trader, right, and this is something that goes way back for me, I've always wanted to understand why a market comes back to a level then reverses, right? Why does the market come back? Market was shot up, came right back to this level, went back up, stopped here, and then came back down, went back up, stopped here. Why? There must be a reason. Well, there is, okay? And it deals with the value, perceived value of the market, right? You can see here, right? This is what we call this is the value area. Every bar, right? I talked about earlier about every bar having a value, a point of control, right? The area of um, volume, the most volume in a bar. Now, value area takes it a step further. If you've ever studied market profile or auction market theory, you understand what the value area is. Value area, on a profile is where 70% of the volume trades for the day. But you could actually take it and you could customize it to whatever time frame you want, or volume range, or tick range. And by understanding where that volume is concentrated on, it gives you an idea of where value is, where people perceive value to be in the market. And that's why the markets come back to a certain level here, or here, or here, okay? So again, value areas where 70% of volume traded for a defined period. Now, most traders in the past defined it for a day, right, on the daily market profile. But you could define it for a shorter time period, or even custom periods based not only on time, but volume or ticks even. This is euro currency. This is a 5-minute euro currency chart yesterday. You'll notice it would come up, we hit the high, start coming off, stops right here, goes back up, makes a new high, starts coming off, stops right here. Well, why? That's because that's where this value area was forming. Now, where it gets more interesting is you can see that this value is developing over time. It's not just this one bar, but you have another one, another one, another one, another one, another one, another one, another one. This was the area where traders found a lot of value. Market made this new high up here, starts coming off. You can see it came right back to the tick here, to the tick here, and continued down. So 5-minute chart. Now, this is on 10-year notes. Market sold off, went back up right to that area, came back off right to this area again, right? I mean, it's the way I describe it, it's like getting the beans from the guy that sold Jack his beanstalk beans, right? By understanding that, hey, you know what? I have an area here, right? I could have the software project it for me on a chart, tell me that if we come back up here, we could probably come off, or if we come back down here, we could probably rally. Wheat, this is a tick-based chart, 250 ticks. You got a level here, you got a level here, a level here. Market came back to this level by a tick. Market came back to this level. Market came back here, popped up a little bit, went sideways, and sold off. Then I got a level here. We're staying below the level, coming right back within one tick of this level, right? This is the best market-generated information that you could have, because it's not based on price itself, right? I mean, people talk about Bollinger Bands, MACD, RSI, EMAs, everything, everyone's got all these different indicators that are based off of price only, right? Or some derivation of price. But when you start making tools based on the order flow, you're basing tools off of the market, right? Order flow is the market. I always laugh. I see people sometimes posting charts up. Oh yeah, I'm using this Bollinger Band, 20 Bollinger Band with a 21 EMA. Well, it's basically the same thing, right? You got to start looking at the market's information, how it's trading. This was today after CPI. The CPI number came out very wacky. Price action afterwards. But you can see, right, I got a level here, right? Value that was forming here, value that's forming here. What's this market do? Well, it's trading in this range between the upper value and the lower value. That's what you expect to see when you're looking at value, right? You expect the market to be trading within that value to hold, just as you saw, on the wheat market, on the 10 years, on the euro currency, and on the E-minis, right? Markets love to trade around value. They love to establish value, because that's what the markets were created for, right? To transfer risk. And where do people want to transfer risk? At areas that they perceive value at. So when a market comes back to existing value, that had just been created, it often reacts to that. So I've covered a lot in the last 40 minutes or so, and hopefully by now you know some of the ins and outs of order flow and how to make smarter trading decisions. Unfortunately, I can't cover everything in a quick training session like this, but there's much more to learn about order flow trading, and I hope that you now have a good understanding of order flow basics, right? Go from the I can't do it mindset to the I can do it mindset, and I've worked with a lot of retail traders over the years, since I left JP Morgan, and the ones that I find that do the best are the ones that want to learn, the ones that will be see the market as a question and try to answer it, right? If they get stuck on something, they'll try and figure it out. They don't rely on people to spoon feed them, right? Because at the end of the day, you got to be motivated yourself, because trading can be a daunting experience for many, but with the right set of knowledge and strategies, you can learn how to trade order flow. And when you join orderflows.com, which is the company that I started after leaving JP Morgan, I share with you my most valuable trading experiences to guide you and make sure your efforts are optimally rewarded. So I've got something special for you. It's the Order Flows Trader software, the software that you saw used in this presentation. Okay, now I created this software because the software that was out there was just basic, right? I mean, it was good. It was a simple footprint chart, but I needed something because I know that the software can do analysis for you. And when I released the software years ago in 2015, there were 4 tools. Now there's like 18, 17 or 18 order flow tools on there to help you understand. I've talked about a few today. I talked about the value areas. I've talked about sequencing, right? I've talked about market weakness. I've talked about, what was the other one? Yeah, I can't remember it now, but you can see that that is the software doing that analysis for me to make my trading a lot easier rather than sit there trying to pick out what's happening in the order flow. Oh, is this happening or that happening? No, I program it into a software to show me what is taking place. So if you want to get started, go to orderflows.com/oft6. Okay. It's and really what it's like. Okay. It's like taking everything that I've learned about trading with order flow and putting it into your software. So it's like having get inside my mind as like having me sitting on behind you or next to you when you're trading, tapping you on the shoulder saying, hey, you know what, this is taking place in the market, or this is taking place, or there's weakness here or there's strength here. Take advantage of it. Okay. And really it's something that I started years ago. It's starting to be implemented by a lot of other softwares. But yeah, you can get other order flow software, but it's not. They're not the ones that created the tools, right? And as a result, they don't have the education that goes with it, right? Because if you've ever felt like you're struggling to understand something, only to have it click and paste and become easier, that's the power of understanding how something works. And take trading, for example. If you don't understand how the market works and what makes the markets move, it's going to be very confusing and frustrating. And the big mistake traders make is thinking that having the right software is all they need to be successful in trading. But it couldn't be further from the truth, right? So if you don't know how to use this software, it's not going to do you any good, right? I mean, it's one thing to have software that tells you, hey, this is happening, but you got to know how to trade it, right? That's why I focus on providing education on how to trade with order flow, because I want my students to be successful. And I know that starts with giving them the tools they need to understand the market. But once you have a solid foundation, you begin to place trades with confidence, and that's when the real success starts to happen. So to help you on your trading journey, right? Not only are you getting software, but you're getting education. You're gonna get access to my order flow trading course for free. Normally I sell it for $297. You can go to my website now and buy it for $297. I'm including that for free. But not only that, I'm going to give you access to 56 more videos from my Inner Circle video series, right? This was a series of videos that I did on a lot of different little nuances in the market, right? In the order flow, so that you know what to look for, right? And you can understand what's happening in the market. And when you add all that up, right, the software normally sells for $900, training $297. The Inner Circle video series is another close to 500. And to be honest, you can't even buy the Inner Circle video series at all, right? It's only available as part of this promotion. That's already a total of almost $1,700. Now, it's one thing to learn from videos and books, right? I mean, but you got to be disciplined and you got to make a commitment. Say, okay, I'm going to study 1 hour every day. And it's hard for a lot of people because life gets in the way. And what I found to be very helpful for traders is live training where you can ask questions to me, right? And for the last 3 years, I've been hosting live user training sessions that are open to all users of our software, where I drive home what I saw in the order flow for the past week, and you can ask your questions about areas you may be struggling with your analysis or understanding the markets. And if you can't attend, you could watch the replay. We've got over 195 episodes there, right, that you could watch. And it kills me because I see people selling software, then they want you to pay extra to learn how to use it, to learn what you're looking at. What's the point, right? You're already making an investment in the software. That should be included in it, right? People charge $200 and up a month for that. And I have people been in my sessions since I started doing them several years ago, right? They still attend them, they still watch them. Now, what I discussed today is just a small sample of the kinds of analysis that I talk about on a weekly basis in the live training. And it's every Tuesdays at 7 p.m. And tonight's one of those nights. Now, I go into much more detail of trading with order flow. And again, sometimes you got a question, you're stuck with something, I don't understand, or, maybe you want me to take a look at a market and see how my analysis compared to yours. That's what the whole point of these weekly sessions are, is to give you access to me that, you know, is something that, um, you know, other software just don't provide because they just want to sell software. They just copy indicators or tools and put it out there for a lower price, but they don't give you that access. Now, as a special bonus for those of you from Investors Expo, is I'll give you also a trading course that I provide. It's called the Order Flow Playbook. Okay, and there's like 8 or 9 modules in here, but there's 10 additional order flow trade setups that you will learn. So not only, again, will you get software, but you're going to get trade setups explained to you so you know what to look for when you're looking at the market. Normally I sell this for $297. You're going to get it for free. So when you add in the price of the software, $899, the trading course $297, the Inner Circle video series $497, the weekly group training minimum of $200 a month, the order flows playbook valued at $297. And these are prices that I sell this stuff at. You buy it separately, it's going to cost you $2,190, $2,190, but you're not going to pay that. It's just a one-time payment of $749. So just go to orderflows.com /oft6.html. I put the link in the chat. There's no more recurring payments or any other payment in the future, or I've seen, I know I've bought software where it's like they keep getting rebuild every month or every 6 months or every year. And it's like, you can't cancel it. It's like you try to cancel it and you think it's canceled, then you get another charge. You dispute it, you lose. Or you can even cancel your card and then you still get charged on it. I hate that. That's why it's just a one-time payment. There's no recurring payments or charges that you're going to get in the future. And that's important to me because I don't like that, and I'm sure nobody else likes that. Now, you will need to pay your data fees and NinjaTrader fees. My software runs on NinjaTrader 8. Okay, so obviously you can't get past paying data fees because you do need a real-time data. You just need level 1 data. You don't need level 2 data. Level 1 is all you need. So to get started, go to orderflows.com /oft6.html takes you to this page. Just scroll down the page on the side. Now there's a bunch of videos. There's an explanation of all the tools that you're getting. And you can see down here, it's going to take you to this button. It says click here to buy. You're going to get the Order Flows Trader software. You get access to the Order Flow trading course, the Inner Circle video series, the weekly live group trainings, the Order Flow playbook trading course. Now, granted, keep in mind it will take a some time to get these set up because you have to manually go in and create login user IDs for the trading courses, and things like that. So just give it a little bit of, give it some, hour or two, while your order is being processed and everything else is being generated. So it's just $7.49, and it takes you to PayPal. PayPal processes your payment. I don't get your credit card. I don't want your credit card information. I got enough stuff to deal with. And then you just go through there, right? So to get started, go to orderflows.com/oft6.html. And as a special bonus, if you made it through the end here, I wrote a book on order flow trading. Okay, it's called Trading Order Flow. And this was originally, the plan was for me to write this book, not to create any software. But then, when I was creating when I was creating the book, I was like, gosh, this is how the software got developed, as I was writing my book. And I'm like, gosh, it'd be so much nicer if these tools, things were put into the software. And that's how software was developed, as a result of this book. Now, you're not going to get an actual hardcover copy. You're just going to get a digital download. So go to orderflows.com/book.html. I also put the link in the chat. You're going to have to enter your name and email address, hit submit, and it'll take you to the download page. Okay. So again, to get started, just go to orderflows.com/oft6.html. And I hope to see you guys on the inside. Okay, you know what? I got a little bit of time here. I'll take a look at one or two questions. Trader says, I love your YouTube. I was creating some YouTube videos earlier this year. I had to stop for some personal reasons, but I am going to be starting up again. Um, I did get sick um, earlier, late last month, early this month, so I've really been not feeling well, so that also hindered me posting new videos. So a question I get a lot is, will this work with Forex? Well, yes, it will work with Forex, but I do recommend, if you're trading Forex, to seriously consider looking at the CME currency contracts, because there's a big difference with data. Data that comes from Forex brokers come from that particular broker, which is usually a white label from a bank. It could be JP Morgan, it could be Barclays or B of A, and you're trading against their book, whereas futures markets are traded through a centralized exchange, and the bid and the offer that you see, it's what everybody sees. Every trade that goes through is what you see as well. Whereas with Forex, it could be, think of it as a trading pit. Something could be trading on one side of the pit, but not trading on the other. Okay, and that could be a problem when it comes to data, because your data feed can be different than the data you're getting from your broker. Okay, and lastly, what platform does the software run on? Well, it runs on NinjaTrader 8. Okay, NinjaTrader, it's for retail traders. It's a good platform. You don't need a fancy, let's say, computer or whatever. The software will run on an i5, an i7. But you do need a relatively recent computer. Sometimes people haven't upgraded the computers for 10 years. Anytime you're trading, all right, you got money on the line, you want to use something decent. So if you're going to be trading, stick with a good trading platform. And I've found NinjaTrader to be reliable. So on that note, everybody, I'll end it there for this presentation. Again, thanks for taking the time out and catching this presentation. And if you got any questions, just let me know. Right, my email is just mike@orderflows.com. So have a great rest of your day, and I'll catch you guys later. Bye-bye.